All right, welcome back, everybody. Time for today's three-stock lunch. Today, we trade three stocks that are being added to or taken out of the NASDAQ 100. Here with our trades, Malcolm Ethridge, CIC Wealth Executive Vice President and CNBC contributor. First up, Malcolm, welcome, by the way, is Zoom, part of the annual makeover of the tech-heavy NASDAQ. Zoom is going to be out of the NASDAQ 100. What's your trade on Zoom, which, of course, was the pandemic darling? A little of the luster gone now.
Yeah, Tyler, that one for me is a sell. I'm not surprised to see it getting booted from the NASDAQ. I think during COVID, it was a great name that provided an essential service. But since then, they haven't found a way to really pivot away from the one singular product they have, which is their video chat service. And so I think they're just in danger of names like Microsoft and Google, who can sell multiple products to the same enterprise software client, just continuing to take market share and not leaving much left for Zoom.
Are they an acquisition target potentially?
I think it is a great potential acquisition target for someone who doesn't already have their own video conferencing service. And so I would look out for that in 2024 for those rumors to start floating around.
Up next, another I think of it as a pandemic darling. That would be Doordash, added to the NASDAQ 100. Shares up about 2% today. Your trade on Dash.
Yeah, so Doordash I actually consider a hold. You're right that coming out of COVID, we saw a trade down as far as demand for their services. Folks started moving around and were willing to go and pick up their own things on their own. But they have started showing great unit economics, right? The Q3 earnings report, I think we saw something like a 27% increase in revenue. But my concern is if the consumer is slowing down as much as we think they might be, folks are stretched budget-wise. We're seeing, 401k hardship withdrawals at all-time highs and that sort of thing. That's going to impact Doordash directly because one of the very first things that you're going to cut as a consumer are the convenience items, not necessarily the staples. And so Doordash, I wouldn't go building a position in it today, but if I already own it, maybe I would hang on to it, hoping that we do get some sort of soft landing.
All right, let's move on finally to CDW Corp, also being added to the index. Shares up about 1% today. So what's your trade on that one?
So that one I consider a buy, and there's a little bit of a trend happening here where this one was actually impacted by COVID in the sense that where the world initially stood still and companies needed to send out laptops and different docking stations and all those sorts of things to their employees, we're about 3+ years removed from that, which means that we're entering that replacement cycle where those same companies will need to start trading in those older models for new ones, and CDW is perfectly positioned to actually capitalize on that increased enterprise spend from small and mid-sized companies.